we want to look at a question on the preparation of the balance sheet. So we're going to look at a question from the question paper of October 2020. So this is going to be our question, which is question 5.1. Our question reads that the following information appears in the books of bargain manufacturing for the year ending 3rd November 2019. So you are given details in terms of a list of balances that we have. Then on the required part, our question requires us to prepare the statement of financial position, and that is the balance sheet of bargain manufacturing as on 3rd November 2019. And we can take notes. Our question is at 25 marks. So this is what we have. We go to our answer section. We see that this is our balance sheet of bargain manufacturers. So we are going to start on assets according to the layout that we have for preparation of the balance sheet. So we are going to start on the section of assets. And then, of course, we are starting with non-current assets. So for the non-current assets, we'll start with the description of the property, plant and equipment. Property, plant, and equipment. So we can take note that our non-current assets are subdivided into tangible non-current assets and intangible non-current assets. So in terms of tangible non-current assets, we have a property, plant, and equipment where we put all the tangible non-current assets. So we refer back to the list of balances and try to pick those tangible non-current assets. So on the tangible non-current assets, we have landed buildings, we have equipment, we have vehicles. So we are going to add three, whereby we're going to say 1,750,000. And then we add the equipment, which is 450,000. And then we add vehicles, 800,000. So after adding, we are going to see that our total becomes 3 million. So we have a 3 million as our total for property, plant, and equipment. Then we check if we've got intangible. Intangible, we're talking about financial assets. We talk about fixed deposits. If we have it in the list of balances, we see that we do not have it. So in that case, it means we only have tangible non-current assets where we are supposed to close. So 3 million becomes the total for non-current assets. So we put a total here, and it becomes 3 million, representing now the total non-current assets. So from there, we're supposed to move to the section of current assets. Whereby the total for current assets is supposed to come in the last column, but we're going to list the current assets that we have beneath that. We can just try to pick in terms of what current assets do we have in the question. So you see that starting from the beginning going down, you see that we've got finished goods inventory, but we see that we also have work in process. It's also part of inventory. So what you're going to do, you're going to say 40,000 for work in process as inventory, and we add 46,000 for finished goods inventory. So we just come here and we say inventory. So remember, we are saying 40,000 plus 46,000. And then we get your answer is 86,000. We try to pick another uh, current asset that we have. We have petty cash is representing cash and cash equivalents. Remember, components of cash and cash equivalents, we've got petty cash, we've got bank, we have also cash float if it's there. So in this case, we have got a petty cash. We check, we also have bank that we have here, 89,000. To go down, see that we have got only two. So we're going to say 8,000 plus 89,000 for cash and cash equivalents. Whereby we are saying 8,000 plus 89,000. So we add the two, you see that you're going to get your answer is 97,000. So we refer back. Any other current asset, we go down, you see that we've got trade and other receivables, 163,000. Then from there, we check again if we have got any other current assets. I believe that you see that seems we've exhausted all the current assets that we have. So we can now close to 8 to get the total. So we are saying 86,000 plus 97,000 plus 163,000. So we get a total of 346,000. Then from there, we are supposed to get our total assets. So basically for total assets, it's equal to non-current assets. So basically we are saying for total assets, it's equal to non-current assets, then we add your current assets. So the same we are going to do here, whereby we are going to say our non-current assets 3 million plus current assets 346,000. And then we are going to get your total is 3 million 346,000. And of course, we can cross. So remember, we are supposed to prepare our statement of financial position according to the accounting equation. So our statement of financial position is prepared according to the accounting equation. So what does it say? Says total assets is equals to your equity plus your liabilities. So it means that we've calculated the first part of total assets. So the total that we get here is supposed to be equal to the total for equity plus liabilities. So according to our balance sheet, we are now going to the section of equity and liabilities. So we're going to say, uh, beneath that now we proceed as saying equity and liabilities. Whereby under equity and liabilities, in this case, we are going to start with the figure for capital. As given in the question, remember this is a sole trader or sole proprietor. So we are going to have capital as part of equity. But we see that we are given the capital figure as 2,727,000. But this figure that we are given represents opening capital. So we want the closing capital. That's the figure that we are going to put there as capital. So how do we calculate our closing capital? So the formula that we are going to use to calculate our closing capital is equals to the opening capital. We add net profit. If the question has got a net loss, you're supposed to subtract net loss. And then if you have got additional capital in the question, you're supposed to add additional capital, and then you subtract your drawings. So according to our question, we try to see we have got opening capital as 2,727,000. So we're going to say 2,727,000. So we are given a net profit of 543,000. So we add 543,000. And then additional capital, according to our question, we do not have additional capital, but we have drawings is 65,000. So we are supposed to subtract our drawings, 65,000. Then we get the figure that is supposed to be in the balance sheet. So we can just summarize our working, whereby we say, according to information given, remember we said 2,727,000. We add our net profit, which is 543,000. Then we less our drawings, which is 65,000. So basically, this is our calculation. And then we get the figure for capital is 3,205,000. So the figure for our capital becomes the figure for equity. So basically, here we are supposed to have a description of equity that is going to represent our equity. So we can just create that space whereby we say so we can just save equity and liabilities just beneath equity and liabilities. And we have equity. That's the one that is going to start. So this is going to be representation of our equity. So this figure is going to represent us as equity. So we can just put it there as equity, which is 3,205,000. So that's what we have. So after that, we go to non-current liabilities. So for non-current liabilities, what are we supposed to do? We check in terms of the information given, long-term loan, mortgage loan, they are part of non-current liabilities. According to a question, we've got long-term loan of 90,000. So we have 90,000 as long-term loan. So having done that, we see that this is the only non-current liability that we have. So we can close again to put our total for non-current liability here is 90,000. And then we go to the section for current assets. So here we are supposed to have your current liabilities. Sorry, it's supposed to be current liabilities. Remember, we are now on the liability section. So current liabilities, we look for items like trade and other payables are part of our current liabilities. So we go back is that we've got trade and other payables, which is 10,000. Which is 10,000. We check for other current liabilities. We see that we are not having, if we have any accruals of expenses, it's part of our liabilities. Short-term loan, we can look for those. We see that we do not have, but if you check, we have got SARS. So SARS, when it's given like this, it means it's a current liability for 1,000, unless stated otherwise, where it has to fall under current assets. But in this case, I will just assume it's a current liability for 1,000. So we are saying SARS for 1,000. So what it means is the business is owing SARS in amount. So that's why it's under current liabilities. So in that case, we can now add, get the total. Whereby 10,000 plus 41,000, you're going to get a 51,000. Then from there, we are supposed now to give our total equity and liabilities. So the figure that we are going to get there becomes the figure of the other side of the equation, of the accounting equation. Let's refer back to our accounting equation. You see that we have got our accounting equation here, which says total assets is equal to equity plus liability. So the equity and liabilities total is this side. So it's supposed to be equal with the total that we got for total assets. So for equity and liabilities, we're going to add our equity figure, 3,205,000 plus all our liabilities figure, 90,000, and we add again 1,000. And then we get a total, which is supposed to come here. To be the second balancing figure. So if you add the total, is supposed to be 3,346,000. And you see that our total asset figure is equal to our total equity and liabilities figure to say your balance sheet is balanced. So basically, this is what we have on the preparation of the balance sheet on our cost and management accounting N5 question of 20 at 20. So let's stay tuned for more videos to come. And let's not forget to subscribe and share to our channel. Let's meet again in the next video.